Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Monday, December 22nd, 2025. So, looks like Santa's running over the Grinch right now, but I still am on the side that we're going to have a little bit of volatility, a little shakeout here and there. But we've seen the S&P when everybody was calling for, the death of technology, and we're going down, and we really just wanted to buy that entire dip. And this is a 2-minute chart. I'm just showing you what we closed today, plus 44. But this is it. We got from you saw the S&P go from 67.20 all the way up to 68.80 in a matter of days, and the Bears are getting slaughtered. So 3 days, this is it. It was a little bit of a panic, but I think the Christmas rally is in. So the S&P closed up 44. Now let's take a look at some of the other charts here. So spiders, this is a little warning call right here. This is the I mean we used to back in the day call these things wicks, and let me show you how they play out. And they don't always play out, but this is one that was going all the way back till November 28th. And you can see this one fired off to the downside. What it does, it goes straight down, but there's no trades there. And there's another one. So I really don't know what they are, but for some reason, price ends up coming back and typically closing these. So again, they're not all the time. This isn't 100% guarantee, but here you can see we had one at 676 and we had one at 673. So if we come back, here's the one that's closed on the 675 level, which was on 1216. So we have that's closed on 1216. We got a bounce. This one was closed on right around where we made this low. So you can see that these actual wicks play out and they give you a pretty good idea. And the reason why I'm showing you that is we had one that fired off today that brings the S&P back down to the 6080. So from here, I mean, it's a $4.83 move. Now, what wouldn't surprise me is if we get some kind of gap up tomorrow, maybe see the S&P test the 60. I'm sorry, the spiders test the 60, 87, 687.58, only to come back down and maybe close this level. But again, we have the seasonality is on the side of the bulls. So this may be after the holidays this gets closed, but there's a chance it does it, tomorrow and finds its support. And the way that I would be looking at that is a one. This is our two, 1, 2, 3, 4, and then there's somewhere five here. And then this would be that's of a wave three. This is a wave four, and then we would make the wave five coming all the way back up into the where the previous highs were. So I just wanted to point that out. We have to keep that on our mind. Taking a look at the ES, this is that megaphone or the reverse symmetrical triangle. So if this is going to be the top, 69.70. That will bring us to new all-time highs, and it's another 40 points higher than where we are. Now, on the RTI, this is a little bit, I wanted to show you this because the symmetry works out really good. So you can see let me delete this. Okay, so this is where I took this low to this high, down to this low. So it's an ABC move, and the target is coming up to the 2647. So from there, I'm assuming that if we do have a little bit more weakness here, and it finds support at this level here, and the reason why I put it there is because I wanted to see where they would match up. And if this is an A and now we're making a C, a B and a C, you can see that the price targets are the exact same, right up at this 2644. So we would anticipate that if we do see weakness in the Russell, there would be buyers waiting somewhere around that 2560 level, only to shoot it back up to the 2644. So I thought that was a little bit neat, keeping an eye on that part. But let's go back to our regular charts, the S&P. And you can see we got this gap up in the morning, kind of consolidated all day. If the bears can take out these lows right here at the 68.70 level, then we're going to be looking at a move probably coming down and testing I would think it's going to test this gap up right here, this gap up bar, and that would be the 68.56. If they lose that, that's where we start looking at them closing the gap or coming up to down to this support. So the first support we'd be looking at 68.56. Second support, if it's lost, 68.40. I would be using these as buying opportunities. I do think that by year's end we're going to be taking out the all-time highs, and but we don't want to just be jumping in, because you can jump in up here and then you start panicking if it comes down. So we want to build, not really chase up here. If it comes down, start building a position. And if it keeps going up, then you just ride the stocks in the portfolio, which did fantastic today. But anyway, you can see we did have some bearish divergences. So a little bit of weakness. This is only a 5-minute chart, but we had those in place. So seeing a little bit of weakness would make sense. 15-minute chart. We don't really have any bearish. I guess we do. This is the high here. So we have some bearish divergences. This is where the divergence started. So this would be a natural spot for possibly the S&P to come down to. But again, I don't think it's going to come down that far. I think it would be more if we do get it. 68.40 would be a good landing spot. But the support is really at the 68.60. So bearish divergences, but we did burn off some of it as far as the momentum. So I'm again, seasonality makes things a little difficult to go against the Santa rally, because I've tried it before, and it's it stings if they don't let go the bulls, and most of the time they don't. But we just want to keep an eye out what is here, so we're not blindsided. So if the bulls can get above the 68.81, should have a clear shot back up to we have some resistance at 68.95. But above that, that's where we're looking at the all-time high, or a test of the 6,900. On the hourly chart, we don't have any bearish divergences. So whatever weakness should be looked at as a buying opportunity, with the upside target being up at this 69.25 level. But obviously, they're going to have to get it above the 69.05. So let's take a look at IWM. Closed up the best today, 1.11%. Did some pulling back once we came up to this level here. Again, if it takes this out, we're looking at the next support coming in at 252.87. Then we have this gap up support that's at 252.09. And then we have the gap fill, which would be really kind of hurtful to the bulls if that does happen, because then we're looking at a move coming somewhere down into the 251. So that's a lot of work to be done, and we still have a gap down here. So I would expect, if the bulls are going to continue, to see some support in this 252.87 within this channel, and then see in the next move come up and test these all-time highs. That's the way I'd be looking on that. On an hourly chart, we don't really have any bearish divergences, so doing some backing and filling would make sense to be able to roll over the momentum, and then when we have that blast up to the 258, we'll probably get some sell signals. Now, the fund had one of our best days in a while. We've had a couple losses because of these quantum stocks. But let's start off with where are we? Okay, so here's RGTI up 13% today. RGTIW up 25% today. QBTS 20%. We have IREN that was up 5%. So we had a really, really good day. Our RXRX was up 3%. And then GLXY, which I like, was up 2%. So we had a really, really good day. And as you can see here, we made $13,729. So again, once the quantum stocks were going to bottom, that's why I was buying these on the dip. When we start getting these rips, we just start scaling out of them. But I believe that we're going to see a test of the previous highs that were there for all the quantums. And like I said, I'm a full believer in the AI and the quantum. And to me, if they give us any kind of pullback, just use it to buy these stocks, because if the RGTI can take out this resistance right here, it really does have a clean shot up to the 34 and then the 36. Above that, here we go. Now we're heading up to these previous highs up here. And again, if we got long from these areas and it gets up to this the 44, you start taking some off. But I still think by February, we're going to see them trading up at these levels as well. So really good day for the fund. Hope you guys enjoy the rest of your night, and I will talk to you guys in the morning.